Hey there, ever wondered if your money could be doing more for you, even in your checking account? We're so used to the traditional banking system, the one our parents and their parents used. But what if there was a different way, a challenger in the ring, that could not only handle your everyday spending but also help you grow your wealth, almost on autopilot? Today, we're diving deep into a fascinating comparison, Acorns Spend versus your traditional bank account. Which one truly reigns supreme for your financial well-being? For decades, the traditional bank account has been the bedrock of our financial lives. We open a checking account, maybe a savings account, get a debit card, set up direct deposit, and pay our bills. It's familiar, it's seemingly secure, and it's everywhere. Think about the big names: Chase, Bank of America, Wells Fargo, your local credit union. They offer a vast network of ATMs, physical branches where you can talk to a human, and a dizzying array of services, from mortgages to loans to investment accounts. The appeal is clear: established trust, convenience, and a perceived sense of stability. You know what you're getting, or do you? But let's peel back a layer. While traditional banks offer convenience, they also come with a hidden cost, or rather, a missed opportunity. How much interest are you earning on your checking account balance? For most, it's a minuscule fraction of a percent, barely enough to keep pace with inflation, let alone outpace it. And what about fees? Monthly maintenance fees if you don't meet certain balance requirements, overdraft fees that can sting, ATM fees if you stray outside their network, foreign transaction fees, the list goes on. While many of these can be avoided with careful management, they represent a potential drain on your hard-earned money. Beyond the fees, there's the often overlooked aspect of what your money isn't doing. It's sitting there, largely stagnant, while the bank uses it to fund their own operations and investments. You're not directly participating in any growth. Now, let's introduce Acorns Spend. If you're familiar with Acorns, you probably know them for their micro-investing platform, where they round up your spare change and invest it. Acorns Spend takes that concept a step further by integrating a checking account directly with their investing features. It's designed to be more than just a place to hold your money. It's a tool for automated saving and investing. When you open an Acorns Spend account, you get a checking account with a debit card, but here's where it gets interesting. It automatically rounds up your purchases and invests that spare change into your Acorns Invest account. Plus, it can automatically invest a portion of your direct deposits. It's like having a financial assistant built right into your spending habits. The core philosophy behind Acorns Spend is to make investing accessible and effortless. It removes the psychological barrier of needing a large sum of money to start investing. By automating small, consistent investments, it aims to cultivate a habit of wealth building without you even noticing. Imagine every coffee, every grocery run, every online purchase contributing to your investment portfolio. This set-it-and-forget-it approach can be incredibly powerful for long-term growth, especially for those who struggle with traditional budgeting and saving methods. So, let's dive into the nitty-gritty of the comparison, starting with fees. Traditional banks, as we discussed, can be a minefield of fees. While many offer ways to waive monthly maintenance fees, e.g., direct deposit minimums, average daily balances, it still requires active management on your part. Overdraft fees are notorious, sometimes hitting $30 to $35 per instance. ATM fees can add up quickly if you're not strategic. Acorns Spend, on the other hand, operates on a subscription model. For a flat monthly fee, which varies depending on your Acorns subscription tier, e.g., Acorns Personal, Acorns Family, you get access to Acorns Spend along with their Invest and later, Retirement, accounts. This means no monthly maintenance fees, no minimum balance fees, and no overdraft fees. They also offer fee-free ATM withdrawals at over 55,000 all-point ATMs. For many, this predictable, all-inclusive fee structure can be a welcome change from the unpredictable charges of traditional banks. Next up, convenience and accessibility. Traditional banks, with their extensive branch networks and ATMs, often win on immediate physical access. Need to deposit a large sum of cash? Walk into a branch. Need a cashier's check? Head to your bank. However, in our increasingly digital world, the need for physical branches is diminishing for many. Acorns Spend is a fully digital experience. You manage your account through their app, which is intuitive and user-friendly. Deposits can be made via direct deposit, mobile check deposit, or linking external accounts. While cash deposits might require a workaround, e.g., depositing at another bank and then transferring, for the vast majority of everyday transactions, Acorns Spend is incredibly convenient from your smartphone. And as mentioned, their extensive network of fee-free ATMs makes cash withdrawals readily available. Now, let's talk about the big one, interest and growth potential. This is where Acorns Spend truly differentiates itself. As discussed, traditional checking accounts offer abysmal interest rates, often less than 0.05%. Your money is essentially losing purchasing power over time due to inflation. Acorns Spend, while not offering high-yield interest on the checking account balance itself, directly facilitates investment. Your rounded-up spare change and recurring investments go into a diversified portfolio tailored to your risk tolerance. This means your money isn't just sitting there, it's actively working for you in the market. Over the long term, even small, consistent investments can compound into significant wealth. This is the core appeal, turning your everyday spending into an effortless investment strategy. Security is another crucial factor. Traditional banks are FDIC insured, meaning your deposits are protected up to $250,000 per depositor, per insured bank, in case the bank fails. Acorns Spend accounts are also FDIC insured up to the standard limits through their partner banks. Furthermore, Acorns utilizes robust security measures, including 256-bit encryption, multi-factor authentication, and biometric login, to protect your personal and financial information. Your investment accounts are also SIPC protected, which safeguards your securities up to $500,000, including $250,000 for cash claims, in case the brokerage firm fails. So, in terms of security, both options offer substantial protection for your funds. With that said, thanks for watching and until next time.